that, my next guest, Richard Cookson, still thinks Japan is a pretty good bet, and as Global Chief Investment Officer of Citigroup's private bank, he has a lot riding on his opinion. Richard, thanks very much for coming in to speak to us. My great pleasure. So you are overweight in Japan right now. You think the sell-off we've been seeing is completely overdone, exaggerated?
Exactly. In fact, we, in relative terms, increased our overweight yesterday because we have actually reduced our equity positions elsewhere in the world, actually in Europe. So on our calculations, Japanese stocks are about their cheapest since the 1960s. Cyclically adjusted, you're going to see a fall in profits, but on a cyclically adjusted basis, they are mouth-wateringly cheap. We think that there's been a paroxysm of fear in Japan, not surprisingly given what's been going on. But from our point of view, Japanese stocks are about the best equity market out there.
Nevertheless, you must be concerned about the long-term economic consequences of this disaster. Given the scale of the disaster, some people would say, how can you be bullish right now?
Well, yes and no. I mean, clearly there's going to be a dip in demand in the first half, but a combination of spending by government and loosening by the Bank of Japan means that actually for the full year, you're probably not going to see that much change in our economic growth forecasts for Japan. And in fact, if you look at the fiscal year, they're probably edging up slightly. So clearly there's going to be some damage in the first half. It remains to be seen quite how extensive those are. We have sort of rather biblical scenes coming out of Japan. I mean, they are truly distressing and awful. I spent 3 years in Japan in the 1990s, and places that I have travelled to now no longer exist.
Incredible.
But from our point of view, and it's a slightly, it's uncomfortable talking about such matters. We think that Nikkei is good money.
So you're saying that, yeah, and I'm sure there are others who will be thinking the same thing. Stocks are cheap right now, represents a pretty good buying opportunity. So where specifically do you see these lucrative opportunities? Which industries?
Well, I mean, there's the obvious ones, such as construction. I would assume, again, cars, a whole bunch of other sectors, internationally competitive sectors. And don't forget that Japanese industry has spent the last umpteen years outsourcing, shifting production offshore. So just because you've got a huge problem in one part of Japan doesn't necessarily affect those companies' prospects too fundamentally.
And again, I mean, you were saying you're not very bearish on the long-term economic prospects. Some would say, well, given their fiscal position was so dire, a debt burden some 200% of GDP anyway.
Well, that's in gross terms.
That's raising some serious concerns.
There are some big questions there. And it's quite true that compared with 1995, when the Kobe earthquake struck, Japan's fiscal position is much, much worse. We don't look at gross terms, we look at net terms. And net terms is about 121% of GDP, not 200% of GDP. The government, in a sense, owns some of its own bonds. But that compares very unfavorably with after Kobe, when it was 19%. So, sure, there are some fiscal constraints. That's why you need much more activism from the Bank of Japan. The yen is likely to rise as money is repatriated, and I hope and pray that the Bank of Japan will be far more aggressive than its rather tepid response so far.
Because that's going to hurt exporters?
Up to a certain extent, but don't forget that actually they've done an extraordinary job, even though the yen has been strong in nominal terms, in maintaining profitability over the past couple of years. And in real terms, actually, the yen is not that strong because it's been a deflationary environment. And the big question in Japan, the really big question in Japan, is whether this emotional financial shock actually means that Japan gets its act together in a way that it hasn't done over the last 10, 20 years.
Great to get your thoughts, your analysis.